We love to focus on cash flow properties, whether they be performing right now or not. However, we also focus on land when it makes sense. We felt like the improved lot market in Arizona last year was probably at its absolute low. We bought 102 lots in a suburb area of Queen Creek, which is right outside of Gilbert. The unpaid balance was over $15 million to JP Morgan Chase. We paid $3.6 million for the property, which to adjust, not including the purchase of the land, to just improve those lots, it would easily be $60,000 a lot. So we paid $36,000 a lot, or slightly under, and so we felt like we were getting the land free and most of the improvements for free also. We contracted that for $5.6 million. The only misleading figure here is although we paid $3.6 million, we had about $350,000 of improvements that we still had to make in landscaping, etc. And so that closes October 4th to a national home builder.
Hey, Andrew, could you comment maybe on how far out is Queen Creek from the Phoenix metropolis?
Great question. When we look at land or improved lots, we want to focus only on infill areas. And so although Queen Creek is slightly outskirt, it's in the part of Queen Creek that butts up against Gilbert, which is a really high-end, high-demand community for starter homes and mid-size homes. And so we felt like that was an infill piece that had been undervalued. That's why we made the purchase. There are properties out there that you can pick up for $2,000 or $3,000 a lot right now that still, they were $40,000 just to improve those lots, and they were selling for $75,000. But still, you don't want to do that because at $3,000, the projection of when growth will hit is so far away that taxes and carrying costs, including HOA, could eat you alive. So in short, when we do take land that doesn't have cash flow, it's typically with a very short turnaround in mind. One thing we're doing with fund dollars is we'll take in money and it will sit in our fund while we're finding the opportunities so that we can act relatively quickly. Of course, the money's sitting in accounts that earn 1.25% to 1.75% right now. And so one thing we're doing is purchasing residential foreclosures here and there. We're being extremely selective, and frankly, in Arizona, that market has all but dried up. But we're still having a lot of success in Southern California, believe it or not, and Las Vegas, Nevada. We have, in the fund, purchased 27 residential homes, and typically about 30% below market is what we're targeting. We want to target a home that we know exactly what we can sell it for, undercut it once again, give incentives to the buyers so that we can liquidate these quickly. We have a 90-day hold anticipation, and so far our 27 homes have averaged 58 days. These are actually homes that have been purchased and closed.
When you say the market has dried up, do you mean banks are holding on to properties longer, or that it's more competitive and prices are being bid up so you're not looking?
In Arizona, it's become much more competitive. It was absolutely like taking candy from a baby 14, 15 months ago in the foreclosure market. And now, instead of standing there at the trustee sales with one person bidding, the room looks just like this. And everyone's got checks, and they're mostly you guys from California going over there trying to take advantage of foreclosures. One thing we really like about Las Vegas is in Arizona, when you bid on a foreclosed home, if you bid $200,000, you have to give the trustee $10,000 that day, and then you have 24 hours to pay for it. Or if you do it on a Friday, which I used to always do, you have all weekend to pay for it. In Nevada, what happens is if you bid $200,000, you have to hand him $200,000 right then and there. And so that really weeds out a lot of competition, and you're bidding against far fewer bidders.
What fund are you holding these in?
This one is in both our Equity 1 and Equity 2. We only do it when we have money sitting idle, and it may be $600,000, it may be $700,000. But so far we've yielded 49.63% on the 27 homes.
How many of the 27 have you sold?
All of them. Those are 27 bought and sold. Currently the portfolio probably has maybe 9 in it. There are situations where we found this is going to be a little longer term hold. This is not something the equity fund is in, but just to show you, in this case, this is a property in North Scottsdale called Cave Creek, probably one of the highest end areas in Phoenix Valley. The property appraised for $11 million at one point. We bought it from the FDIC for $1,432,000. We felt like today it's worth $2,400,000. However, we do feel like just one single lot in there will sell for $2.5 million when things come back. This is a spectacular property with views out the wazoo, and but we also find it to be probably a 3-year hold.
Can I ask you, you said when things come back, could you get your crystal ball out and give us an idea of what you project in Arizona and these other investments?
Sure. First, let me answer that we don't do any due diligence speculating on when things come back. We want to make the purchase knowing that we've earned our money the day we make it. In this case, although we do want to hold this property, we truly feel like at $1,400,000 we could liquidate it today at $2,400,000. But to answer your question, boy, I would have told you in May things are roaring back, and they were. And since then, we've slid quite a bit again. And so that's one of the reasons why we own 9 foreclosure homes right now. We're starting to be a little more cautious right now, want to see what shakes out in Europe, etc. Our dollar's looking weak again. And so right now, I would say a 3-year hold is probably still speculative, assuming that we'll continue our upswing that we've been on for the last 12 months and not get slowed down by recent events.